You're listening to Toronto's #1 real estate podcast, powered by Watson Estates. The most successful local real estate investing starts right here, right now. Here's your host, broker, investor, and social media influencer, Bradley Watson.
Good morning, investors. Today is June 11th. It is Thursday. We have some great content for you today talking about our local real estate market. We are #1 on Google Podcasts for Toronto real estate. Thank you for being a listener. Thank you for tuning in. If you're joining us for the first time, what in the world are we doing here? Well, we're going through the local news that's happened over the last 24 hours. And today, because the world is so connected, we're going to be going a little bit outside the box to talk about what could happen specifically in the second half of 2020. What awaits our local real estate market? Dun, dun, dun. And then what happens when the stimulus stops? If you guys don't realize, the emergency benefit today, I guess this week really, marks the last month of promised benefits to be given out to Canadians. Now, whether we're going to be going to jail or not is to be determined. But what happens next month when many Canadians cannot apply? Is the second half of 2020 the end of the show here? We will see. We're going to talk about that today. And then I want to talk about this article. Came out of a survey. How many buyers and sellers are holding off in our marketplace due to COVID? And so we're going to dissect these articles. We're going to talk about it. We're going to have a lot of fun today. So thank you for joining us. Leave us a comment. Give us a thumbs up. Leave us a review. I missed you guys. I'm so happy to be back. As many of you guys know, we had a baby girl come a few days back, last Friday actually. So she's not even a week old. But we're having lots of fun. We're getting a decent amount of sleep. We actually have my mother-in-law helping us out, which has been wonderful. And in the meantime, the world is going crazy, right? We've got Starbucks has decided they're going to close 200 shops in Canada. So what? Nobody's going out and grabbing their coffees these days? But it's okay because I'm a McDonald's guy myself. Their coffee's just better. And plus, it's way more classy. All right, guys, we're going to have some fun today. Let's start off with our first article. We're going to be talking a little bit about, I want to come out of this article, I want to talk about the status of our real estate market, what prices are doing, where we sit, but also looking to the future on, we're kind of compiling these forecasts. So for example, today, RBC Economics just announced, I guess in the last 24 hours, their position on what's going to happen in the coming years. And we're having constantly evolving updates. And what seems to be happening is I'm noticing a lot of them are grabbing onto what other forecasts have said and are almost changing what they're saying. It's very interesting. So like, I feel like it's cheating. Like, I mean, we're doing it here, but I'm not an economist. So I feel like we're allowed to take this information and kind of create it and make our own. But I'm noticing that the economists are kind of changing their tune a little bit and they're all lining up. So if you listened to our podcast yesterday, you'll know that we had this very interesting conversation, this idea of immigration, this idea of employment, and it came out of the National Bank news. But today we got RBC saying almost the same thing, which is so fascinating. So listen to this article from torontostories.com. A report released by RBC Economics today contains some positive, albeit realistic, insights for the future of the Canadian economy and the Canadian housing market. So it's really weird. This article catches you off guard because it starts off very optimistic, very positive. Listen to this. This is a quote from their report. While it's too early to declare victory over COVID-19, the economic downturn that came along with aggressive containment measures in a large number of developed countries appears to have bottomed. This could be true, so this is the article again, when looking at the housing sector across the GTA. The month of May, while certainly not a banner month by any means, did manage to make April seem like a low point, which we've seen that, we've been tracking that, we're on the same page, got it. Some of the numbers we saw, number of sales in May remained down on a year-over-year basis. 53.7% decline was still less drastic than at the high point of minus 67%. So a pretty substantial bounce back, that's 14% right there in a matter of a month. Doing really good. What's more, the number of new listings rose. So while all this is happening, things are coming back on the market. We've got improvement happening and this balance has been maintained, and yet we've still got new listings rising 47.5% month over month, according to TREB. So while May was certainly nothing to brag about for the Toronto real estate market, I've been bragging about it, it was better in nearly every way than April, suggesting that the market may be starting to look past COVID-19 and all its implications. The bottom may have already been reached, and we may be on our way back from the worst of it. this is going to sound like a completely different article, by the way, than the second half of this article. It's completely different. So this is the perfect moment to pause. And there was another article from Toronto Stories. I'm not going to read into it too much because I think it's a little fluffy and it catches people up. And it seems to be geared to people in Halton. But there is an article that they had that says average sale price in Oakville up nearly 10%. So their board, the OMDREB, so that's the Oakville, Milton, whoever the hell board, that's their board locally. Because not everybody is on the same board, by the way. Treb, we hear Treb all the time because they do further stats, but everyone has board. Like there's the Brampton Real Estate Board, right? We've got like out in Niagara. Everywhere you go, Barrie board. Like everywhere you go, there's different boards. This is why a lot of people miss out. So having an agent that has access to that local market matters, and if not, you have to be able to step through hoops a little bit to make it work. Anyways, so they released on June 5th. And covering the month of May, they found the average sale price in Oakville moved up by 8%. I'm not going to give the numbers because they're just too high. Who can afford to live in Oakville? I guess it's not much different than a low-rise in Toronto. 1.4 million, that's the number. That's huge. That's average. The numbers show that with the major reduction of new supply, there was sufficient buyer interest to move our property values higher. However, with an easing back to business coupled with the lowest mortgage interest rates in years, we will see sales numbers eventually start to improve when an increased supply of listed properties hit the market. Does that sound like a realtor? It's because it is. It's according to RE/MAX. RE/MAX, they got their nose in everything, and it's only good news. But there you have it. They're optimistic, and they've seen what is like kind of been what we've talked about is the optimistic news has happened in Oakville. And that's not just Oakville, by the way. This is a highlight of this article. That's why I didn't want to focus too much on their city in particular. But there's a lot of markets right now where supply has been brought backwards. And we're going to see the stats of that later in this podcast. But at the same time, buyers, yes, they're pulled back. But because this balance is maintained when the sellers pulled back, we're not actually, if anything, the low interest rates and like all of this additional push for potentially cheap prices like this, even though if you were to ask a person, like even 2 weeks ago in Oakville, what are house prices doing? I'll bet you they'll think, oh, well, they're softer. It's a good time to buy, right? I guarantee you they would have said that. Like they didn't realize that this was a pocket where it really wasn't. And so people are getting a little bit excited because like, now's my chance to buy. That's my chance to buy. But they're not really realizing, well, maybe it's not as good a time to buy as you thought in that marketplace. And so that has also stimulated demand. And there's a lot of demand pressures. But there's also, getting to the second half of the first article, there's also a lot of downward pressures. And this is where this article flips its head huge. This is a quote from RBC. This is the same report. Consumer spending, home resales, and measures of business sentiment also improved in May, albeit from unprecedented lows. While the May data was encouraging, the recovery will remain slow and depend on continued progress on curbing the rate of infections. Here we go. Starts to change the tune. All right. So what they're saying in this point, this is your segue point, and this is the one that we all kind of land on in the middle, is they're not talking about a crash. This is what this point says. They're not talking about a crash. We're talking about how long will it recover. So we're not talking about everything falling down now. Like it's already fallen down and we've hit the bottom. Okay, we're talking about how long will this grow? How long will this get repaired? Which is a different tune. We have seen extreme articles talking about negative prices, but then it flips itself all the way and starts to sound very negative. So listen to this. Indeed, and they actually highlight a lot of the same things we heard from the National Bank report yesterday. The current unemployment rate hit a record high of 13.7, despite managing to add 290,000 new jobs. RBC is forecasting by 2020, the real GDP growth will be minus 5.9, which is rough, compared to 2019, which was 1.66. And the bank believes that while 2020 will end with Canada's economy running significantly below potential. So we're not doing what we can do, obviously. The projected overall, they're saying by 2021, it'll be back up to 4.2. That's what they're saying. So they're a little more optimistic on the GDP side. But they said this, RBC is hedging on a downturn. This is after listening again to CMHC, what they have to say. Like CMHC's been very negative, and I think that this is kind of being reflected now in what the banks are saying, because they're like, well, how can you be so optimistic, but yet the government is being super negative? Like there's such a disconnect. So I think they're trying to hedge their bets a little bit here and say, well, you know what, maybe it's not as good. It's not as bad as they're saying, but it's not as good as maybe it could have been. But when we look at the numbers, it has been pretty decent. According to the report, low levels of immigration, another byproduct of the crisis, and an elevated unemployment rate will likely curb the rebound in housing, with sales likely to fall by almost 20%, and prices, which have held up so far, likely to come under strong downward pressure over the second half of the year. Okay, wait a minute. So we're not dropped anymore. Like this article literally said, we've hit the bottom. But then this second half of the article talks about how, like, is it two people writing the same article? Like, how can you just change your tune like that? Like, they are so confused. Is the news so confusing that halfway through writing an article you forget what you're writing about and you change the entire concept of your article? So here's the funny part. Second half of the year. This downward pressure in the second half of the year. When is that? Guys, this is June. That's next month. So maybe things are going to happen quicker than you think. This second quarter, second half, second whatever. Second, it's always later. It's next quarter. Quarters are only in 3 months and a half. We're halfway through the year. So these numbers, if they were to take hold, these unemployments, this immigration, and what we're going to talk about in a minute, the CERB coming due in the sense that now you're not getting it no more, potentially. Is that our second half? I think so. That sounds like second half. Forget the second wave of the virus. I mean, that's obviously there too. But the economy in itself, like, there is a lot of question marks right now. The GTA has received 1/3 of the immigrants, which is typically 100,000 people, which is a third of the country, but they've taken a big hit. But as of May 12th, the report from the Conference Board of Canada estimates the number of people coming into the region will drop to 65,710. So, what's that, a 35% drop in immigration? It's a big drop. Low interest rates and access to credit will also be instrumental in guiding the economy back to wealth. So thank goodness things are cheap. Not so much right now, but on the tail end of all of this. But we're going to see that this backfired in an interview with Mr. Justin Trudeau. And it is so funny. I'm going to tell you this is the one time I think it's good for you to jump off the podcast just for a second. Go onto YouTube, watch the video. I'm going to tell you about it. It's so fascinating. At least it is to me. With the end of the emergency benefit payments quickly approaching for millions of Canadians, and more than $180 billion in mortgage payment deferrals already on the balance. That's the other thing, is this idea of deferrals. That's coming due as well. This was for 6 months. So we're talking the next couple of months. Guys, there's so many things happening right now. Who knows? I'm just going to throw my hand in the air. Like, at the end of the day, we're going to have to spend more money. Like, let's just be honest with ourselves. The government, are they going to spend? It's all going to come down to, are they going to spend more money? If they're going to spend more money, if they're going to throw money at it, then we'll be okay. Because we threw money at it and we were okay before. But if they don't throw money, we are literally screwed. Like, completely screwed. The Canadian housing market better hope to find some shade soon. This idea of things heating up, and not in the good way. Obviously, we're going to get burned. Okay, here's the video, guys. Check this one out. There was a video that I saw posted somewhere on Facebook. Someone posted it. But I watched it. I mean, my jaw nearly hit the floor. Now I was lying on my stomach on the floor, so maybe that's why. But Justin Trudeau has tense moment with reporter over question on Canada's debt. So if you don't jump over, here's what happened, okay? A reporter asked, how are you going to service the debt as the costs will be high? Like, the idea that we're spending so much money, your costs will be high. As soon as he heard the word costs will be high, Justin Trudeau was like, excuse me? Like, as if you're like, what are you even saying? Like, you're an idiot. It sounded really funny. And then his response was, well, interest rates are at historic lows. Like, as if this guy didn't know that. The question is because interest rates are at historic lows, therefore it's cheap. Like, is your theory here that because it's cheap money, let's spend it? Like, that literally sounds like, oh my gosh. Like, it sounds like a kid that just got a credit card. Yeah, but it's a piece of plastic. Like, whatever. Like, we're just going to spend it. Like, mom's got it covered. Like, what? Really, really fascinating conversation. But here's the part you're missing. Will interest rates are going to go back up, are they not? Like, unless you know something we don't know, are interest rates never going to go up ever? Like, forever? Because as long as we're spending money, we're going to need to service that debt. There's going to be servicing costs. And yes, they're low now, which is still expensive. If interest rates go back up, God help our children. So anyways, his response, watch that conversation. It's so fascinating. It's kind of comical. It's kind of funny. It's like, you kind of missed the point here, dude. Like, the idea isn't that interest rates are low now. It's the servicing cost. It's a lot. And if interest rates go back up, it's going to be a lot. Can't afford that. But apparently we can, because we can just keep printing money and no consequences at all. And if we need to keep interest rates low, this is why I never really saw interest rates coming back up in any long term. If you look at the charts of interest rates for the last, I don't even know, I don't have one in front of me, but decades, okay, you'll see a steady dropping. It comes back up, oh, steady dropping, comes back up, oh, steady dropping. The ups don't catch up to where it's been in the past. Our spending is so high, we cannot afford interest rates to go higher. And that's what's leading to historic low interest rates. That's the reason that interest rates are so low, by the way. I love how it's like, oh, interest rates are low, so our costs are low. But no, your costs are gonna, it's literally, you got it completely backwards. Like, we can't get the interest rates higher because your spending is so high. Whew. Let me give you an outside perspective to all of this, guys, to try and bring this home. I am not an economist, but I do love me some good stock market. At the time that I'm recording this, actually right before I started filming, I double checked it. We're filming before it opens the market at 9:30. The Dow futures are down right now for today, 3.3%. Okay, the S&P 500 futures are down 2.6%. So we just got, if you were to look and be like, what the hell just happened? Like yesterday, we just dropped from 2.5 to 3%, and that number is still going up. By the way, we'll see where it is at 9:30. But why? Why did that happen? Well, let me tell you why. Yesterday, the United States Federal Reserve, they had an opportunity to either bring rates down and to make a statement. Like they've been making weekly statement or monthly statements now, which is kind of unprecedented. It's unusual, but because they want to be transparent, fine. But they sounded very bleak about the next couple of years. That was one of the things that happened. But they also they said that they were not going to raise rates. They weren't even thinking about raising rates. The rates were remaining at 0.25, which is virtually zero. And so what that means, I've kind of looked into it. What it means is because the rates are low, it means less profits for the banks, right? So to be on this trajectory of like, we're just going to keep interest rates low. They're never, if you were to say they're never going to go up, is that not what Trudeau just said? They're never going to go up. That immediately smacked down the market. Immediately. I mean, there's concern of deflation. Some people would argue there's concerns of inflation, right? Like we're printing so much money, there's inflation. Yet we're also seeing deflation. What turmoil are we in? These off-the-cuff remarks about just spending recklessly. I mean, if anything, it gives me confidence because like, we dropped 3%. Yeah, well, you know what? You're going to get that Trump pump happen later in the day. Whatever. It saves the day. This market is so strange. It's so against fundamentals. Even Warren Buffett didn't invest in the bottom of the market because it didn't even bottom out. Whew. All right. Let's get back to housing. While we're kind of talking about that, I saw an article that came out of the U.S., and the housing market is rebounding, but what happens after stimulus support measures fall away? This is the article, but when I'm reading it, it might as well have been written by a Canadian. Like, it's the same story. I'm not going to read the whole thing, but here, listen to this. There is an old saying in real estate development business. When a novice makes a mistake, it's because they miss the nuances of the market. When a pro makes a mistake, it's because they miss the obvious. Some participants in the residential sector have been applauding the resilience of homebuyer demand and rent collections while looking over their shoulder, bracing for a sudden slap in the face when the government, quote, stimulus winds down. Is that slap really obvious and real? And if so, will it be felt by the entire housing market or only at certain levels of the market? We need to look a little deeper because very little is obvious in this environment. Well, duh, yeah, this is crazy. Massive transfers from the federal government have kept the economy, this sounds like Canada, guys, from sliding into a depression despite depression-like unemployment rates. Even with states, cities, and suburbs reopening their economies, it will take a while to get back to anything close to full employment. Government transfer payments have kept spending from collapsing completely for now. At least by certain measures, there have been a V-shaped recovery in home sales, also in the market, as well as amazing resiliency in the apartment market. But what happens after the music stops? And instead of what happens after the music stops is when does the music stop? Like when does the government stop giving everybody $2,000 a month? When do they say you don't need to give deferrals on your mortgages anymore? And whenever that happens, however you slice it, that's going to hurt. That's going to hurt. And as of right now, that's scheduled to happen in the next month to 3 months, depending on which one you're most concerned about. So it's some very fascinating things happening right now. Yes, there is a buying opportunity in some markets, maybe not in Oakville, but in some markets. But it'll be so fascinating to see, does this actually crush our real estate market or not? It has some people taking the deal right now while they see it and having some confidence in the market, but it also has some people super freaked out. And I don't blame you guys. Like, I get it. I get it. Wherever you stand on the spectrum, I get it. Nobody can forecast the timing and magnitudes with confidence, but it certainly is a good time to start thinking ahead about the likely impacts, and that's what we do here. Welcome to Toronto's #1 real estate podcast. That is what we do. We talk about what's been going on. We talk about the news, and with COVID, this has been a wonderful opportunity to do this daily to try and stay on top of it. Here's the fail safe, right? The spend till your face turns blue. It's not going to cost us any money later anyways attitude. Here's an article from Global News. Coronavirus extending CERB for months could cost extra $64 billion, PBO report suggests. Well, here's my question. Why are we even asking the question, what will it cost if we extend it? Are we going to extend it? I'll bet they will. That's my bet. Cast your bets, folks. Leave in the comments below. Do you think they are going to allow us further CERB? In which case, like we already allowed it until October, but there was so maybe it's just a matter of saying, you can keep going. Keep going. Well, it's going to cost us $60 billion, but who cares? It's cheap anyways, right? We have all-time low interest rates. Okay, all right, let's get into, actually this, I'm surprised this article that we're talking about in the news popped up last when it comes to Toronto real estate. This, you know what the reason for it is? Listen to the title, the heading. It's a real snooze fest. Nearly half of prospective homebuyers willing to consider virtual showings amid COVID-19 survey. Boring. I'm really good at snoring. My wife gets pissed at me when I do it because she feels like I'm practicing, so at night she pays the price. I'm a snorer. Divulging personal info. Okay, guys, don't judge me for peeing in the shower, guys. Come on, we're friends. Come on. Nearly half. Listen to how this article starts. It's so boring. But the info that came out of this report, they really should have changed. Literally, if they just changed what they were talking about in the header, in the headline. Headlines are everything, obviously. They would have captured a far bigger audience. There's a lot of juice. This is one juicy steak in here. Actually, I'm ribs for dinner tonight. I hope they're juicy. Let's go. Nearly half of Ontario who plan to buy a home in the next 2 years say they are willing to consider going ahead with a purchase, even if you can only view the property virtually, according to a new poll. Who cares? Anyways, here's the numbers, guys. 48.9% of prospective buyers are either open or somewhat open to buying a house virtually, compared to 46% who say they are not open or somewhat open to the idea. Another 4.5% were unsure. It's like, so half the people are willing to buy a house without having looked at it virtually. Like, I find it so cute, all these old people, I want to buy a house virtually. Oh, I sold my first house virtually. Come on. It's a house. You got to live there. You going to buy it virtually? Don't be dumb. Even if I have a client that's like, I'll buy it virtually. They better have been willing to buy it virtually before the pandemic. Like, if the pandemic is why you're not going to look at it, guys, it's going to be me and you. We're going to have masks on. We're going to have gloves on. We're going to sanitize our faces. We're going to be fine. Prospective sellers were slightly more willing to consider virtual showings with, of course, because it's their house. So 54%. I'm surprised that number is not higher. Of course, you're more willing to show your house virtually if you're the seller. The buyers is really what we care about. What was funny about this is it says only 7.1% of prospective buyers said that they had hoped to purchase a home in the next few months, even if the pandemic is still going on. So when they start to say, okay, well, all right, so you're willing to do it, but let's look at the numbers. Only 7% were actually willing to do it. Meanwhile, 26% said they would buy a home as soon as it ends. 66% said they were not sure. So, like, you're all excited about, the whole article is on this premise that people are willing to buy things virtually. And then it talks about how, well, when you look at the numbers, the same 50% said yes, but only 7% are willing to buy. Like, that tells me that only 7% are willing to do it. Anyways, you're willing to say anything. It's just lip service, guys. It's just lip service. Look at that house. Unless it's an investment property, you're not going to live there. You want to make sure that the smell of your neighbor's curry doesn't leak through your door. You want to know that before you buy it. But here's where it gets fun, okay? Because this article is a good one. There's a reason I picked it, and here's the reason. They also asked buyers and sellers. Well, here we go. The willingness for a buyer to purchase a property. So the buyer side, we saw 7% willingness, which we just kind of talked about, but 26% they're going to wait, 66% they're not sure. But then we also saw the selling side. The poll also revealed there is a portion of prospective sellers that have held off on their listing for properties due to COVID. What are the numbers? Nearly 39% of them said that they had intended to list their property before various social distancing guidelines were introduced. So that works out to 61% of prospective buyers and sellers, meanwhile, said that the pandemic will not have an impact on their decision. 61%. That's your number. Is it any mystery, if 61% of what we had before is still there, that there is a 53% decline in sales right now? That there's a little bit of a gap there. There's an 8% gap. Is that people selling their home forcedly? No, I don't think so. Not right now, anyways. Maybe in 2-3 months. Stay tuned, but not right now. Those numbers line up, so it's kind of a duh moment. But this is what people are saying. This was a survey that was conducted on behalf of Treb by these guys. What are they called again? Nanos Research. Ugh. These are the stats, guys. This is the news of the day. I'll be honest, I am optimistic about our market. If you're going to try, real estate is one where it's not like you can just trade a future and sell it and I'll buy it up again tomorrow. It's not like that, guys. We're talking about a real estate market. What do you think is going to happen in the next year or two? Do you think generally we're going to see price declines? Do you think we're going to see price increases? I don't think 2-3 months ago, unless you were listening to our podcast, many people were talking about the potential of prices bouncing back pretty quickly. I don't think so. But yet it did. We have a very resilient market, so I am optimistic about our marketplace. Don't be trying to day trade real estate. However, it is important for us to know what's been going on in our marketplace so that we can find the buying opportunities for us, for my clients, for ourselves as investors. So while Q3 happens, you know me, I'll just be over here sipping my mocha latte grande, extra whip. We got to work on that dad bod. And we'll just see what happens. Look like Kermit the Frog with my little teacup. I'll see you guys tomorrow with more. Have a wonderful Thursday. Take care and keep it real.